What's up, everybody? It's John Barr with PRYME Homes, bringing you your monthly update of the San Antonio real estate market. So we'll go ahead and just jump right into this. We got some interesting things that really kind of happened in the last month that I kind of want to cover and make sure anybody that follows this they are aware of. So we'll go ahead and go over the June numbers. Average sales price $257,753, which was a 4.2% increase year over year. The median sales price this month jumped $9,500 from the month before, which is a 7.3% increase year over year. So we saw a huge jump in the median sales prices this last month. Usually those numbers usually hover around 3, 4, 5, but this month it jumped $9,500, which just to me just explodes, and you'll see it in the next graph where it really is kind of taken off compared to where it historically has in the last couple months. Total sales $3177, 4.6 increase year over year. Average rental price $1481, which is a 2.9 increase year over year. Employment numbers for May, I wasn't able to get June by the time that I did this. It just wasn't available yet. So hopefully next month we'll be able to see what happened with employment and see if that might have been some correlation of why the median sales price jumped so high. But it was just over 1.1 million, which is a 1.87 increase year over year. But there was 2,800 jobs lost from the previous months. Not much, but we did see a net job loss here in San Antonio. Unemployment, which is 3.61, which is a 0.01 increase from the previous month. So 2,800 job loss, little increase in the unemployment to be expected. Months inventory, which is a 3.21, 0.14 increase from the previous month. So there's a little more inventory kind of popping on the market right now, so it might be slowing things down, but we are still in a huge seller's market, since the balanced market, they say, is a 6 months inventory across the market. So this is what I was talking about. You can see San Antonio on that 6-year, we're on that 6-year high, and how fast this jumped up. I mean, year over year, we were talking last summer from 195 to about, just shy of 200. And then now we went from 200 and we're already at 215. So that is typically the highest month that we see the solds, and there it kind of traditionally kind of planes out a little bit, but it really shot up this last month. So it's going to be something I'm going to continue to watch to see what might have caused that, or if we're just really in that great of a market that there's that much influx of people that's driving prices up. Monthly rents, I mean, really nothing non-typical happened here. It just kind of went up a little higher from the previous month. It's kind of planing off. Just remember to keep that in mind for the landlords, that try to get your leases to end right around the April, May, June, so you can catch those high summer months when it's best to get the highest rents. 20-year unemployment still just kind of bouncing around here in the bottom. We haven't really seen too much of an uptick, but what I'm going to continue to watch is try to see if we start seeing increase in unemployment. I would expect to see that to kind of start correlating over to real estate prices, because you can see how long it takes to get that down, but how fast it shoots up. So I'm going to continue to watch that to see that as an early indicator if something might be going on in the market, and see if that translates over into real estate prices. So now, where to market in the city? Where are you seeing that you're seeing the highest influx and lowest months of inventory, which is going to create the most upward pressure on prices in the city? So, like we've always said, we have started to see this numbers become closer and closer, as I'm guessing the median sales or income in San Antonio is starting to rise. So more people are starting to be able to afford into this $250,000 price range. But it is still a very strong seller's market, pretty much all the way in the market until you get over the 500,000s. So I would continue to see prices to rise in these price ranges, and see that upward pressure in the prices from the demand and the short supply that we're having here in San Antonio. So keep that in mind if you are flipping a house in these price ranges, that these could correlate to your hard money costs and how long you're going to be holding that property once you get it ready for the market, and what your competition level might be. So the lowest month's inventory and zip codes are right here. So these are all the ones that are going to typically see the highest pressure on the market for the prices to increase, and it's no surprise that these are all under the $250,000 price mark, What you can kind of see here is that 3.14, and everything below that is really kind of low. What I think is happening here is why we see an increase in this price range is a lot more properties that are coming on the market are becoming renovated, and people are trying to offload some inventory in those lower price ranges, and there's a lot of buyers looking on the MLS for properties. So I think a lot of properties are starting to appear on the MLS in that price range where traditionally they weren't. So here's your zip codes for the best prices. And we got the highest month's inventory in the city, and even still some of these, I mean, aren't that bad unless you get out here to Stone Oak. But I mean, your average price range is $500,000 and above. But even these, once you get here, and these are the lowest month's inventory in the city, and I only take zip codes that have at least 30 transactions live from the previous month. But they're all in the highest price range. What did catch my eye this month is 78207. And this traditionally, since I've started, the cheapest real estate in the city. And now the average prices are getting into 77,000. Still high in months inventory, but this is the first time it's come on the market to actually get 30 transactions on the market. I think a lot more people are starting to put prices or homes for sale and possibly trying to renovate and create some value in those lower end areas over there, like 78207, which is just west of the downtown area. So that's pretty much it for about this month, but some things that I have been watching is why did the sales price jump up that much? And one thing I'm starting to kind of get a little concerned about is just last month, Fannie Mae raised the DTI to 50%, which is the debt to income, which was stopping a lot of people from renting homes from the amount of debt payments they had. And they're raising those prices to pack on more debt on top of people so that they can afford a home. So they're trying to expand to raise a lot more or get a lot more new loans issued. I'm also starting to see a lot more of those programs coming out where it's low money down, down payment assistance, $500 downs, no money down style loans, which I've heard a lot of from people that have been in this industry a lot longer than I have, that's when you want to start kind of questioning, are we starting to get towards the top? When you start seeing them start lending to a lot more people that traditionally wouldn't have been lent to, like the DTI increase, the low money down loans, trying to get people into housing to create more loans, that's when you really should start wondering and watching and seeing what's going on with the economy. I think Texas is still strong. We are still projected to have a lot of people move, 1.5 million move here in the next 15 years. So I mean, a lot of people are still moving around, but they are starting to expand a lot easier credit, so a lot more people can start affording loans that could bring into question what's going on in the market and why are they starting to do that. So I hope you guys enjoyed this. Feel free to reach out to me at john@prymehomes.com. Check us out on Facebook. Shoot me an email if you have any feedback or if there's anything else you might like to see. Other than that, I hope you guys have a great month, make some money, and we'll see you next month.